Hi, welcome. My name is Joachim Bergman. First, key takeaways from this video. 2 critical success factors for easier, faster, and valid audits. 1. Generate what shall be reported for each undertaking to know what should have been disclosed. 2. Use the precise mapping between your country's limited assurance and the ESRS disclosures to know exact what to audit more specifically. For undertakings reporting. 1. Focus on what's really material to drive meaningful change and report much easier. 2. Embrace automation for tedious, time-consuming tasks. Efficiency in reporting frees you to focus on what truly adds value. The purpose of this video is to demonstrate how the review of net companies and sustainability statements and the assessor's audit was conducted. This review is tailored to provide an overview of an audit according to the Danish Act on the implementation of the EU Corporate Sustainability Reporting Directive, CSRD, in Danish law by its limited assurance. This limited assurance will be used to review sustainability statements in Denmark for companies reporting under the CSRD. The Danish limited assurance is very similar to those used in Finland, Norway, Sweden, France, and other countries already incorporating it into their laws. Therefore, this review and its advice should be relevant for most EU countries. Our demonstration uses Netcompany's sustainability statement to show this overview of the review process. The same process was applied to both companies. It's important to note, and not forget, both companies have made progress in their sustainability reporting. Now let's start with the review by starting the drill down into Netcompany's sustainability statements. One key strength of Netcompany's double materiality assessment was that it was made on the lowest level, down to sub-sub level, when using the list in ESRS 1 AR16. This should make it more specific what's material for a company and easier to know what to report on, create policies, take actions and set targets. Although Netcompany did not compile a consolidated list of material matters, these were found separately under its topical ESRS. Like here under business conduct. We then checked all these material sustainability matters into this ESRS reporting application to establish the audit scope. Good to know. This web application is currently only available in these 10 languages. The process for determining what to report on starts with Netcompany's all material sustainability matters. Based on EFRAG's questions and answers with ID number 177, this generates the data points Netcompany shall report on. We'll just click here, and then the data points Netcompany shall report on are generated here, in this view. This view is originally used for companies to know what to report on and get instructions and templates of how to disclose each data point. This view is now also used by assessors to audit ESRS sustainability statements easier and faster. We then refine the list by removing data points that are not relevant for Netcompany. Certain data points were automatically removed, as these ones 17 to 17E that are not applicable for Netcompany, as Netcompany has more than 750 employees. And another example, the ESRS E1-8 internal carbon pricing and all its data points were manually removed, as instructed in the application, because it is not applicable for Netcompany's circumstances. Unfortunately, Netcompany did not create and disclose such a list that we created to be able to know what Netcompany shall disclose. Such list are required under ESRS 2 IRO 2 paragraph 56. The list shall include the page numbers and/or paragraphs where the disclosures are located in the sustainability statement. This list is crucial. It not only guides what they should have reported but also simplifies the audit process. This reporting application, and others, generates this automatically. We click here to generate the structure of the sustainability statement and view of data points to disclose. Here the user can see what to disclose and not in the sustainability statement's edit view. Here you can see the removed data points in BP 217 to 17E are strike-through'd as it shall not be reported. Here the user can edit each specific data point, including instructions, tables, templates where applicable, and always with examples of how to disclose. Here's an example if Netcompany should have used this application. Their list of disclosed data points is generated within the annual report. Let's generate a draft of this report in Word format to see how it can look like. The list can be generated inside the whole annual report or just within the sustainability statement. It can be published both digital and for publishing via traditional PDF and similar solutions, no matter if the organization adds its corporate design or as just plain text as in this example. This ensures knowing what to report on, what has been reported, precise references and reduced manual work with the risk of incorrect page references. Both data point ID, paragraph or AR, and of course page number can be included as in this example. When clicking on the link, you will see the disclosure of the required information. When undertakings do not create this required list, they often don't know what to report on, which has become obvious in this example with Netcompany, as you will see in a bit. Additionally, it makes it harder for the assessor to find information. Fortunately, we have generated what to audit for Netcompany in our view here. This was very easy to complete and is a critical success factor for the assessor to be able to know what should be reported, and if it is reported or not. There is one other critical success factor that must be taken care of. The framework for sustainability reporting to audit on is, as mentioned earlier, provided in Section 99A of the Danish Financial Statements Act. One tricky thing with the implementation is that it seems to focus on a summary of elements in the CSRD and is not one-to-one with the ESRS disclosure requirements and its data points in EFRAG's guidelines IG3. To be very clear, companies disclose on specific data points in ESRS. Assessors shall audit on elements of CSRD stated in the limited assurance. Consequently, assessors are struggling with knowing and finding what to actually audit specifically. We managed to figure out this intricate task. The data points to audit specifically under the Danish limited assurance are clearly marked with a yellow approve sign to facilitate for the assessor to know what to assess, as exemplified here in ESRS S45, targets related to managing material negative impacts, advancing positive impacts, and managing material risks and opportunities. Why should this data point be audit specifically when comparing with the Danish limited assurance? Well, according to the Danish Act, the sustainability reporting must include a description of the company's established time-bound sustainability targets. As you can see, it shall be audit in Netcompany's sustainability statement as they assess 3 material sustainability matters to be material in ESRS S4. Consequently, we just audit if Netcompany has set targets and if they are time-bound. Let's check in Netcompany's sustainability statement. As we can read here, no targets exist for this data point and is not found anywhere else in the sustainability statement. Therefore it's marked with red, here, full gap, with comments of why, here. In ESRS, when not setting targets, the undertaking shall disclose if the undertaking has not adapted targets and the reason for not adapting targets, including tracking effectiveness of policies and actions and defined level of ambition as a minimum disclosure requirement. No such information exists, therefore it's marked with red, here, full gap, with comments of why, here. Templates and examples of how to disclose is always available by clicking here. It's available for both undertakings using this tool, and assessors to always know what to audit. To audit this with the help of knowing exactly what to audit and the relatively few data points to check specifically is straightforward and all of a sudden quite easy when following this mainly auto-generated structure. Well, I was just saying we made the job to audit much easier. Said that, there are still a few parts of the limited assurance that can be somewhat more difficult to audit. Let's see what to watch out for. It's related to business model and strategy and due diligence. We start with how the company's business model and strategy take into account the interests of its stakeholders and its impact on sustainability matters. This ESRS data points matches the equivalent text under the Danish limited assurance and is marked with approval and shall be audited accordingly. However, Netcompany only describes that they do take into account the interests of its stakeholders, but they do not describe anywhere how the company's business model and strategy take into account the interests of its stakeholders and its impact on sustainability matters can't be found. This disclosure requirement will also be marked as a full gap. Next, some other aspects to audit on company's business model and strategy in relation to sustainability matters. These were the most difficult to match by the text in the limited assurance versus the ESRS disclosures, but we managed to match these as well, to be able to know what to audit and how. Here are a few examples of what to audit related to limited assurance and business model and strategy. In this section, it will be apparent when companies that try to address everything often ends up achieving nothing. Focus on what truly matters to drive meaningful change. Easier reporting will be a bonus. Netcompany has 24 material sustainability matters. It would have been really interesting to know how they have conducted their double materiality assessment, with, for example, scales and thresholds used, to end up in a situation not managed to report. We continue with the many other aspects to audit on companies' business model and strategy in relation to sustainability matters. We will go through these 2 data points and how they've been disclosed. We start with disclosure of how material negative and positive impacts affect, or are likely to affect, people or environment. We check the comments. Not disclosed. Although it is referred to SBM 3 in the due diligence table in page 72. Why? No such information exists here, ESRS 2 SBM 3, nor in the topical SBM 3E1, a few words only tangible to this subject in ESRS S1 SMB 3 as well in ESRS S4 SMB 3. This is also a full gap. When clicking here, it is always examples of how to disclose available. In this example of ESRS 2 SMB 248 CI, this company in the home appliance industry has 12 material sustainability impacts, which of course made it much easier to focus on what really matters for them. I just can't imagine managing to disclose it for 24 material impacts or, as some companies, having even more material matters to disclose. A sustainability statement would end up over 1,000 pages to comply. This is not what was meant to be. The next one is not disclosed. Disclosure of whether and how material impacts originate from or are connected to strategy and business model. Here's an example of how to disclose this disclosure requirement. Due diligence is the last one to show in this video and how it has been disclosed and audit. Let's go to ESRS 2 Government 4. Disclosure of mapping of information provided in sustainability statement about due diligence process. ESRS 2 Government 4 includes only one data point to disclose on. Although, it requires information to many cross-references to consider and is difficult to disclose on for most companies. Undertakings shall use this table from ESRS 2 AR10 to disclose on this data point. Netcompany has used the correct table. This is the table in Netcompany's sustainability statement. We understand the challenges and will demonstrate why Netcompany is not in compliance. However, we have developed a solution that can help all companies easily meet these requirements and make it easy to audit. First of all, there is none, or just some information in the ESRS headings Netcompany has referred to in their table. If really had disclosed, it also should be better to refer to what paragraphs or data point they have disclosed information related to the core elements in the table. We recommend disclosing it like this instead. Here is the required information based on the material impacts of a specific company and disclosed accordingly to data points required to disclose in the ESRS. We show you the first 3 rows of the table. If you want to use this as a checklist when disclosing this or audit ESRS sustainability statements, consider that these disclosures is only applicable and correct for one specific company, even if most paragraphs in ESRS 2 general disclosures should be applicable for any company. This list is generated automatically in Mentken's ESRS reporting application based on what is disclosed in this specific company's sustainability statement. The fat text is to comply with the CSRD, as the customer wishes to comply with the CSRD and doesn't want to disclose a separate CSRD report. Critical success factors for assessors. Effective auditing begins with what each undertaking shall report. Without this foundation, the audit process is like navigating without a map. Then, use the bridge between National Limited Assurance Standards and ESRS disclosures to facilitate what to specifically audit. Without it, the journey to a valid audit is difficult. Undertakings consider this. In the realm of material sustainability, a company that tries to address everything often ends up achieving nothing. Focus on what truly matters to drive meaningful change, and the reporting will become manageable as a bonus. Thank you for watching. The next video will be about double materiality assessment mistakes and knowing what and how to report, plus how to automate tons of tedious non-value driving reporting obligations. Until then, take care.